Okay, we may as well kick off. There's no one waiting in the lobby. We don't have a huge attendance compared to lunchtime today, so if you want to ask a question during either via voice or typing into the chat, feel free. Don't have to wait to the end. Happy to make it an informal discussion. But to kick it off, we'll go through the financial year 2021. In that period, we made 491 sales against a budget of 360 for a gross realisation of $142 million. And then if you look at the calendar year, so it's continued to grow in that sense, we would have made over 500 sales to this point this calendar year. And in the last 12 months, we've sold 3 years worth of pipeline or 3 years of our stock. And also during calendar year 2021 so far, we've returned over $20 million to our investors through completed projects. And all of those have been returned with a full forecast dividend or payment in addition to their capital. Another key milestone during this calendar year has been the launch of our first mortgage income fund. The first mortgage income fund was developed over a long period of time, largely in relation to demand from existing investors or people that were interested in investing with us, but the Land and Opportunity Fund wasn't suitable due to the payment on maturity. The first mortgage income fund is it's a fund where we pay a quarterly return, but it's not used for development. So it's secured with a first mortgage, hence the name, against real property. That could be residual stock, which in the current market, not a lot of residual stock, or a development site that's got an intrinsic value as is in order for us to purchase and then secure a DA at a later date. And that'll be loaned against or borrowed against a 60% LVR. And a key point, of course, for our investors is that pays a quarterly return. For those people in annuity phase in their superannuation or are looking for that income, it's a product that attracts that type of investor, as opposed to Land Opportunity Fund that's sort of a set and forget. You get paid on maturity and there's no ongoing income. We've also made changes for those that have invested with us for a long time now. The Land and Opportunity Fund, for the first 5-6 years of its life, paid a fixed return of 12% per annum on every single project, regardless of timing, size, and so on. In the world of rate compression, the shorter projects and our ability to purchase sites on favourable terms, we started reviewing that return on a project-by-project basis. And that comes down to the timing, market pressures, and as an overall arching example, previously when we assessed a development site, we would generally be assessing against a target rate of return of 20%, obviously leaving that margin between 12 and 20 for us to keep. We now assess them closer to 15 due to the challenges and the competitiveness in the market, and that leaves a much lower margin for error if we continue to pay 12. So those offers were reduced into our range depending on size. So the shorter the project, the lower return. Sometimes size, sometimes development approval status and things like that play a role. But pleasingly, since we made that change, we've continued to pay exactly as forecast on all our Land Opportunity Fund projects. We would have seen the market, or anyone that reads a paper, watches a TV, has seen the way the market's been performing, certainly in the last 12 to 18 months, but probably the last 6 months in particular has really taken off across the country, both in new development and even in the existing market. We've been a big beneficiary of that, but that's through very good strategic planning. When the COVID pandemic first hit, there was a lot of panic, particularly in the development space. The newspapers were saying the market's going to drop 30%. We certainly didn't foresee the growth and the boom, for lack of a better term, that we're in now, but we thought that the market fundamentals remained strong, particularly in Queensland, There was always going to be stimulus coming, but that stimulus is long gone, and the market's kicked even harder since the stimulus finished. So it's not 100% stimulus driven, but it certainly kick-started things back when we were back opening the doors late in 2020. CFMG Capital in that period, we've probably increased our headcount in our staff by almost 40% since the start of the pandemic. We were hiring people in April 2020 when everyone else was dismissing people in a panic, and that's had a positive impact for us in two fronts. Is that we were able to be ready for the inevitable bounce back, but we're also able to attract some pretty good staff who were on the outer due to the panic in the market. So we had our pick of the bunch, so to speak. Also, in the last sort of 12 months, those that have been following us or investing with us for a while would have seen changes to our customer-facing or consumer-facing branding and marketing. CFMG Capital's been operating for 10 years plus, and in that time we've delivered over 2,500 residential land lots across the country. And the name CFMG Capital didn't reflect that part of our business. It sounds like an investment company, which it is, but we are also obviously a residential land developer. So in order to improve our market or customer-facing position in that market that we exclusively operate in, we launched our CFMG residential communities to better reflect our position in that space, and then also launched CFMG Funds Management, which captures our Land and Opportunity Fund and our First Mortgage Income Fund. And that was more just to reflect how our business operates and to get a better present ourselves to the market in those we operate. So those people working in the residential communities business don't get asked questions about why we're called Capital and so on. And equally, the funds management sales team, for example, don't get asked, how do I buy a block of land off you? But to summarise, I guess, in the last 12 months is the market's been so strong that we strategically acquire land over a period of time, and we like to keep our pipeline planned out ahead. But as a result of the strength of the market, we've sold 3 years worth of stock in 12 months. And then if you simplify that even more, in the last 3 months, we've sold another 12 months worth of stock. So we've been working really diligently in a pretty competitive space to secure more allotments to fund to fill our pipeline. And we've been relatively successful in that space. Luckily, on projects we were already assessing prior to the pandemic, that some of these things, when you're combining adjoining landowners to make something work, it takes time. And we've also, for the first time in our history, been able to secure some land banking opportunities where no cash down now, but are able to secure things on favourable terms in the current market. So to go through our positions, we purchased what we know as Millwood Rise in Nambour. It's a 61 residential lot estate just up on the Sunshine Coast hinterland. We've raised the capital successfully for that through the Land and Opportunity Fund, and are due to settle as soon as a couple of boundary realignment issues are sorted. But pleasingly, even without settlement, we've sold about 80% of the stock in there already, which shows that strength of the market. We've also expanded our Birchwood project. So for those who invested in the initial Birchwood, that's now that was an 89 lot project. We've bought adjoining parcels that will grow that to 300 lots. And that's similar to what we did at Middleton Park very successfully. So it's always good. Certainly they're good funds for investors because it's obviously a proven project. We've got sales momentum, market momentum, development momentum. So obviously buying the adjoining parcels always is one of the soundest acquisition strategies we can do. We did that with Middleton Park. It went from 150 lots to 336, and we're working on making that bigger again. Lamandra Park initially started at 70, that one's in Bridgeman Downs, and that one is now at about 130, and we are working on adjoining parcels on that one as well. Further to the other Sunshine Coast project, we bought one that we know as the Outlook at Yandina, also in the Sunshine Coast land. That's just 29 lots. We've settled that site, raised the capital through the Land Opportunity Fund, and it was 100% sold out in just 2 months. And construction is, we're madly trying to construct that and have it completed for those buyers, and then able to return capital once that's completed. We've also purchased another site that now will be known as Farriers Creek in Burpengary. That's a further 100 lots on the inner north of Brisbane. We'll be launching that to market in January. That one hasn't been released by the Land and Opportunity Fund, but it'll be coming early 2022. We've got a further 60 lots in Morayfield that will be known, in Caboolture, that will be known as Pumicestone Pocket. That one will be launching a market for sale in January, and we'll commence raising capital for that early in 2022. And then the one that some of you might be familiar with is Arborwood in Morayfield. That's 150 lots, very close to a couple of projects we already completed by the Land Opportunity Fund, 2 of our most successful projects. It's just on the other side of the train line from those ones. So those ones were adjacent to the local schools. This one's closer to the shops. So depending on your preference for amenity, it's an equally strong project. And that's the one we're currently raising funds for. And it's a 24-month offer with a return of 9.5% per annum. Further to that, we've bought another parcel of 11 lots in Rochedale. So Rochedale is in the inner southeast of Brisbane. It's what's considered, it's a very premium location these days, about 12 k's from the city, and the land values there, particularly for the size of land we'll be delivering there, which is over sort of 1,800 square metre average, is an over $1.5 million average in that project. So that's a high revenue, low lot volume project. The land banking that I referred to earlier, so we've been able to secure 300 lots in Belmere. Belmere is just beyond the urban growth boundary, where there's the first projects coming to market closer to town, and Belmere will be ready for launch in 2024. And then Sunbury will be coming after that, and that's down out of Melbourne, just north of the airport. It's 150 lots and won't be ready till 2027. I'll just stop there because I got my first question. So the Land and Opportunity Fund only pays after 100% sales completion. No, not quite correct. So generally speaking, the Land and Opportunity Fund will pay out when the amount of sales equals the revenue matches the funds we raise. So we've had projects in the past where we've had an entire stage still to complete, but the first 2 stages, due to revenue growth and successfulness of the project, we've been able to pay out investors well before the project's completed. But essentially, your theory is correct that without the sales and the revenue from allotments within an estate, that's what funds the capital return to the investors in the Land and Opportunity Fund. So you're investing in that particular project and its outgoing, it's at the outcomes of that project and its success. Further to that, I think we can probably talk to the market fundamentals that we've been experiencing across the country, more specifically in Brisbane. So we've heavily weighted to Brisbane in the coming 2 to 3 years. That's not because we are a Brisbane-based company. In the past, we've been heavily weighted to Sydney. We've been weighted to Melbourne. We've got active projects in Melbourne right now that are performing very well, despite none of us having been able to visit them for nearly 2 years. But we are heavily weighted to Brisbane because the fundamentals, we think, in Brisbane are as strong as anywhere, certainly on the eastern seaboard where we focus. While the market is doing extraordinary things in all 3 eastern seaboard states, we see long-term growth in the Brisbane market due to what we call the gap. So in Sydney and Melbourne, traditionally in my sort of 15 to 20 years in this industry, they always boom, or they have their significant growth before Brisbane, and then Brisbane plays catch up for a few years and the cycle repeats. Currently, all 3 markets are in that strong growth phase, but we see Brisbane as somewhere that has significant growth potential beyond the current cycle. And that's because purely Queensland's starting to become a big state like New South Wales and Victoria. It's the economy is growing up here. We've got the Olympics coming 11 years from now, but we're already seeing benefit from that. We also aren't, more so like Sydney, we're not landlocked in terms of there's room for growth north, west, south of Brisbane. And it's not out of the question that sort of by the time the Olympics come around or just after, that Brisbane will probably be one metropolis spreading from Noosa down to the southern Gold Coast, where you basically be driving through built-up area all the way through. Melbourne has that growth potential as well, with flat land as far as the eye can see, north and west, whereas Sydney's obviously got mountains and an ocean to the east. But you have to. It's landlocked. They can't. There's no room for growth beyond their initial borders currently. So you'll have to stretch up down to Wollongong and up to Newcastle. And look, the other thing, the key gap there is the affordability of the Brisbane market. So you can still buy a house and land package in the Brisbane inner ring or sort of middle ring. So within 30 Ks or within a 30-minute commute to Brisbane CBD for under $500,000. In Sydney, you wouldn't be able to get anywhere near that even without the home. And in Melbourne, there's some probably very few select pockets where you can achieve that, but certainly it's not as prevalent. And even in the prestige market in Brisbane, if there's a sale over $10 million, it's on the front page of the paper just about, where if there's a sale in over $10 million in Sydney, it's a regular occurrence, probably 5 times a week. And an important stat that we've picked up in the last sort of 6 months is in Sydney alone, there's over 50 suburbs with a median house price of over $3 million. In Brisbane, there's 0. So even our most sought after inner ring premium suburbs, our median house price has not reached $3 million in a single one. So that's where we see a lot of potential growth, both in the premium market, the middle market, and the development market. So Brisbane's ticking all those boxes for fundamentals, and also significant investment in infrastructure from the government, which was coming before the Olympic announcement. Now with the Olympic announcement, that infrastructure investment is going to be growing significantly. So I think that's probably sums up the last 12 to 18 months. I'd invite any more questions that any of you might have. You can either just talk into your microphone or type something out. If you're having any trouble, just see someone says they no longer have access to the chat. Not sure what happened there.
Just wondering how the Coplik Road units are going and if they're still due to pay out in February, March.
Yes, yep. So that you would have got a note, I imagine, in the past couple of weeks with a small extension on those notes, and that's purely down to what we've had. Brisbane's had about a metre of rain in the last month, and as we said, the your returns are funded by the settlement of allotments. So Birchwood is sold out. They're all unconditional. We've just got to complete construction. Construction, unfortunately, when you have a week or 2 delay at around the Christmas period, that turns into 2 months as a result of the Christmas shutdown. So if you miss your rego date in July, your rego date will fall in August and so on. You miss your rego date late November, December, you fall into February because the industry shuts down for a period. But the current forecast for Birchwood, given that roads are down, gutters are in, plan is in for sealing, it should register late January, early Feb. Buyers will then settle their allotments within 14 days, some up to 21. Capital will become available to be returned to you as soon as possible outside of that.
Thanks.
Got a question here. Aside from First Mortgage and Income Fund, do you have any other product that pay monthly or quarterly or any in the future? So no, currently we don't have anything outside the first mortgage and income fund that pay monthly or quarterly. We are considering in the Land Opportunity Fund to do something along those lines, but at this point, we're looking at how that might be structured. It's very difficult to pay an income when there's no income from the product you're investing in. And the Land Opportunity Fund is paid via the settlement of allotments. So if we haven't got any allotments settled and we haven't finished construction on any stages, it's very hard to pay an income unless it's being essentially paid out of the capital raised. But that is a frequent question. So we are looking at ways to be able to deliver that via the Land Opportunity Fund, but at this point, you haven't solved that riddle. Give you a few more minutes to ask any further questions if you have any.
Can you hear me?
Yes. Yeah.
Okay. I'm just looking at investing for a monthly return.
Yes.
Which I don't know where you would put it, but from your brochure, you have got some like 6 months or 15 months or 2 years, I think.
Yeah.
For a return between 9 and 19%, or just a 6 or 7%, 7.5% for 6 months or so.
Yeah, so we don't have anything that pays monthly. The most frequent payment we have is a quarterly distribution.
Quarterly.
And that's via the First Mortgage and Income Fund.
Quarterly distribution. And that is what?
And that the terms within that are fixed terms or set terms,
Yeah.
6, 12 or 18 months.
Or 18 months, let's say. And what does that return now?
We don't currently have an offer in market for the First Mortgage and Income Fund, but it ranges from 5.95 to I think 7.95, depending on the asset that's underlying the investment.
And you can choose that.
So when it becomes available, so when we issue a supplementary PDS via that product, the only offer choice you'll have is what's in the market on that particular day. And that might be 6 months, it might be 12, it might be 18, but you won't be able to choose, or you'll only be able to choose what's in the market at the time.
Okay.
Yeah.
Thank you, Andrew. That's clarified certain.
No worries.
My question. That means I have to wait for you to tell me there is something.
So we'll when it becomes available, we'll release it. So if you're in our database,
yes,
which I assume you are, given you're present at this meeting,
yes,
you will get sent an offer document or information about the offer, and then you request the offer document, and then one of our team will be in touch with the details, like if you've got any questions. So the First Mortgage Income Fund is secured against sometimes residual stock. And what I mean by residual stock is stock that's been developed within one of our Land Opportunity Fund projects. For whatever reason, we've increased the price or something like that, and it's taking a while to sell. Because sometimes when we complete a project, we've paid out all the investors, we drive the price up of a block of land, and we don't mind when it sells because it's not burning any money. So we're not paying any interest to investors, we're not paying any interest to the bank. So we're happy to wait 3 to 4 months to sell it at the highest price possible. So that's what we call residual stock. Residual stock's almost non-existent in the current market, given market pressures. But then also we might purchase a site that we've got plans to develop in the future. So it's the key point about the First Mortgage Income Fund is we don't use it to develop land. We might use it to buy a development site, or use the money to invest in a development site but secure it against residual stock. But we'll never use those funds to develop land. That's what the Land Opportunity Fund's for, and that's also what we also borrow from the major banks.
Right. What's the downside? Let's say something goes wrong, and what do you still? Let's say the development doesn't come up, or the.
So in the First Mortgage Income Fund, it's generally a LVR of 60%. So to give you an example, the next one I think we'll do will probably be a development site we're purchasing in Brisbane Downs, which is near our Lamandra Park project, but not close enough to be an extension of it, so to speak.
Mm-hmm.
It's a small acquisition of about $1.3 million. But we secured it on terms some time ago. The interesting thing about it is even if we don't get a development approval, because it's in a premium location, it's got a nice big expansive home on it, its valuation as is would be somewhere around the mark of $2 million, even without a development approval. And with a development approval, its value would skyrocket beyond $3 million. So we would seek to raise somewhere around 1 to 1.3 million. And then if we didn't get a development approval, well, we could just resell the property for the $2 million value, return your money and keep the difference. And if we do get a development approval, we would then raise funds via the Land Opportunity Fund to complete the acquisition, and you would be paid out from those funds.
All right. That means you've got still a security behind you. Right?
Yeah. So you've got a first mortgage security over that particular property. So and the First Mortgage Income Fund, that's its key differentiator from the Land Opportunity Fund, not just the income, but it has first mortgage security. So you are ranked first in the event of the sale of that property.
Okay.
And at an LVR of 60% or thereabouts, somewhere up to 65, for your funds to be at risk, we need to see a 35% drop in property value.
All right. Okay. Andrew, I think you've really clarified and answered the question which I was going to ask. The only thing is I have to choose the project you want to be. I want to be in whatever project you're doing. I have to choose 1 or 2 or 3 projects and invest.
So we don't keep an open fund, so to speak. So we don't have a fund you can just invest in at any time and you come in and out when you please.
Yeah.
Ours are all specific to each property or project.
I've got to lock myself for whatever time you.
Yeah. So if one comes along when you're ready to invest, and for whatever reason you don't like it,
yeah.
You might not like the suburb. There might be some reason that you don't like it. You can just sit out that one and wait for the next one. And we've got investors that have been in every Land Opportunity Fund we've ever done. We've got people that have been in up to 15 investments. Yes. And then randomly they sit one out, and it's because they live near that suburb and they don't like it, or there's always some reason. But generally speaking, we will issue an offer, and it'll be related to a specific property at a specific time.
Now, if I want to get out, let's say I take it at 12 months, and in 6 months I want to get out. How does that work?
You can't.
Okay.
So if you go in a 6-month one, your minimum term 6 months. You go in a 12-month one, your minimum term is 12 months. So for the First Mortgage and Income Fund, if you want to withdraw early, you can't be on that minimum term before the minimum term.
Okay. All right. You have to go with the term, huh?
Yep. Yeah. So the First Mortgage Income Fund has a PDS, so an overarching document that governs the product. Mm-hmm. And then each offer has a supplementary PDS, which would detail the term of that particular offer. So they're Class A units, Class B units, and so on. Mm-hmm. So your offer, whichever one you invest in, it will detail what the term is upon investment.
Okay, fair enough. I mean, it's up to me to choose whatever I want.
Yeah, and look, I believe our next one will be a 6-month offer.
A 6-month offer would be for what?
It'll be. I'm pretty sure our next First Mortgage Income Fund offer will be for a site in Brisbane Downs, and I believe it'll be a 6-month term. But things can change, but that's what my current forecast would be telling me.
For the land and the construction?
No, that's just on the site. Then we would be trying to secure a DA.
Ah, yes.
Yeah, and then we'd roll that particular property from the First Mortgage Income Fund into the Land and Opportunity Fund.
All
and
right.
you would be paid out. Yeah.
I don't know. I don't know if I've got any more questions. I think you've answered pretty well. It's straightforward. There's the choice of your offer, and you take it. What's the maximum you've returned on? Like you have a big shopping center coming in from 9 to 19%. You say your target is 19%.
No. It's not 9. It's 9 to 12 for the Land Opportunity Fund.
Oh, yes.
And around 6 to 8 for the First Mortgage and Income Fund.
Okay.
So the most we've returned is 12 because we used to fix it at 12.
Yes.
In our previous history, before we launched the Land Opportunity Fund, we had a different structure where we were a syndicator. We don't do that anymore. And via syndication, people were invested in. They were an equity investor, so to speak. So if the project performed better than forecast, they got the return. Whereas under the current model, that's how we make our money essentially. So if we do a project that returns 40% and we've forecast 9 for you, well, we'll make 31. That doesn't happen anymore, but it has happened in the past.
Oh, yes. Now, what's the minimum investment you're looking at?
$25,000.
Pardon?
$25,000 is the minimum.
5,000.
25,000.
Oh, sorry.
Yep.
Okay. And the maximum?
Well, there's no maximum apart from the total that we're trying to raise would see you cap out. So we have had people. I think the biggest investment we've had via the Land and Opportunity Fund is $1.5 million from a single individual, and they've sort of invested in the vicinity of 700 to 1.5 multiple times.
Yes.
And then the largest in the First Mortgage and Income Fund was 750, and that was, we were only raising 750, so there's only one person in that particular offer. They took the whole thing.
Okay, you've got quite a range, and that comes up all the time, yeah. Because
yeah,
I'm
we've
very
had
new.
periods where we've sort of had 4 to 6 months without an offer, but certainly in the next 6 months, we think we'll have several offers available via both products.
All right. Well, Andrew, I think you've covered almost everything I wanted to know.
If you have any more questions, just feel free to send an email. I'll get it eventually to info@cfmgcapital.com.au. If you've already got a contact with someone here, you can obviously always call them as well.
I have a contact already.
Yeah, probably Daniel or Connor or Ben.
I've got Ben. Yeah, I've got Ben,
Ben.
and I've got also a lady. I've got her name. Jasmine.
Yeah.
Yes, I spoke to her. She called me, and now it's good you've done that because I had a lot of questions and you answered most of them. If I have any others, I will talk to her. And I said to Show, hello Show, if you see me, he's my niece husband, which we did not know each other, but it's amazing that he's already a customer with you. And I said, that client? He said, yes, I'm working with them, and that's why.
Interestingly, over the last, not in the last 12 months, but in the first 4 to 6 years, our largest source of investors was referral from existing investors.
Well, in one way, I feel more confident that he's in there and he's done already okay. I mean, I hope he keeps doing it. But thanks, Andrew. I don't have any other questions.
Excellent. Well, thanks, everyone. I think a couple of people have just left, so we'll wrap it up there. But thanks for your attendance and have a great Christmas.
Yeah, and Merry Christmas to you too.
No worries. See you later.
Bye.